Hey, good afternoon traders, and welcome back to the channel. Today we're going to look at American Eagle Outfitters. Ticker symbol is AEO, and want to say congrats to anyone who took this trade. About 3 weeks ago, I had posted this when we were just breaking out of this little bullish consolidation right about here, and we have absolutely exploded. According to plan, we hit and exceeded my price target of $17, and we're currently trading at $18.82 in the post market on Friday. So again, this was posted about 3 weeks ago. Awesome trade. Congrats again to everyone who banked 35% or even more on this. I actually didn't even get out at the highs. Based on this analysis, if you'll recall, if you go back and watch my video, what you'll see is it was right about here. It was back on August 13th. It was a Wednesday. I posted a video and saying, hey, I think AEO is going to break out higher, put a couple price targets in there, and I said it's probably going to consolidate and then ignite on earnings, and that's exactly what it did. So massive score. Again, congrats on this one. And now we're going to do a post trade review and do things a little bit different and show you how I arrived at that from a technical standpoint, and ultimately where I think we're going next, where we could potentially go, and if you're not already in this trade or sold like I did, where are some good spots to get back into it? Okay, so without further ado, let's look at it real closely. So what do we have here, right? We have this, essentially, now it's a fully formed cup and handle or inverse head and shoulders, however you want to look at that, right? You have your left shoulder, your head, and then your right shoulder, or you could look at it as a cup and handle. Either way, we broke out, we hit target, and how did we first arrive at those targets? Well, the first thing we want to do is we want to look at that cup pattern, or head and shoulders, however you want to do it. It's going to measure the same. So you take that move, you calculate the neckline down to the bottom, and then you put that on the breakout. And lo and behold, check this out. So it gapped up on earnings, and it opened right at our target. So that's where I sold, actually, and I didn't even get the opportunity to take it up higher to about $19, but I'm okay with that. I banked 35%. I want to take that every day of the week and twice on Tuesday. So what do we have now, right? Well, the beauty of this is we still have a much larger target, and I'm going to show you why. So if you take this descending broadening wedge and you take the low point of the wedge to the high point of the resistance, and now we take that out from the breakout of the wedge, which would have been right on this day, you actually have a price target of just over $23. So $23.43 is the exact price target on that. So we're going to mark that off and put that right there, and let's see if it aligns with anything back there. It does not, but I'm going to mark that right there. So that's actually price target number 2. So now that I'm going to drag this over and just move it over here. Actually, I'm going to take it off so we can see this a little bit better. So where can you get back into this to take advantage of this new price target at $23.47, right? So I've sold it. I'm looking to get back in. Where am I going to buy it? Okay, so a couple things here. We have this breakout move. So I'm going to move this over a little bit. So we have this breakout move, and the interesting thing is if we look at it on the daily chart, it closed, this is what's crazy. So it actually closed below the high point of yesterday's candle. So technically, it's not a confirmed breakout. Now, do I think it's going to confirm? Yes. But do I think it can pull back because of this? The answer is yes. So where likely would it pull back? Well, a couple ways to look at that. And what I mean by a confirmed breakout is, in order to confirm the breakout of this wedge, now we confirmed obviously the breakout of this inverse head and shoulders, okay? But we've already hit that price target, right? So now to confirm the breakout of the wedge, you have to be above this closing high, which we were not. We came and closed right below it. So what will likely happen because of this is either on Monday, we can go higher and ultimately confirm, or because we didn't confirm today, we can do some type of pullback on that. So let's measure to where that pullback potentially can go. So we're going to do a fib and just look at these percentages real quick. So my eye gravitates to a couple places. Scenario number one is we do something like this, kind of retrace here, maybe consolidate, and then go higher, okay? So that's scenario number one. That would be a really nice bullish consolidation if we get that. Scenario number 2 would be we would do something like this, maybe, you know, more in like a descending either parallel or wedge pattern, and do something like this, and then we're off to the races. So I could see us coming back in that scenario to about 1658. Or the very last scenario, and the third scenario, is we would do something like this: retrace to the golden pocket over the next week or so, and then do something like this and go higher. So any one of these, and this would be the best entry, obviously. Retrace to the golden pocket right here, retest the breakout of this wedge, and then explode higher to realize that 2349. So the most conservative play is wait for this one. Okay, that would be for conservative traders. Wait for your retest of the breakout of that wedge, right? It would align at the golden pocket, and it would be right there. Or more aggressive traders can buy the 382 fib retrace at about 1658, and ultra aggressive traders would buy a retrace down to say 18, or even this the opening point of this breakout, which was about 1772. So any one of these are valid ways to play it, but I do think it's going to pull back. I do think you will have another option to get in this and take full advantage of the much higher target of 2349. This is a massive bullish candle. There's no questioning that. In my opinion, this is 100% a real breakout, and I think it will retrace. You just have to be a little patient. And you can see RSI is at the 88. Could it go higher? Of course. But likely it's going to roll over. We're going to get some type of correction on the RSI, which is going to lead to some lower prices, especially if the market corrects. As many of you know, the way the market closed this afternoon, we had a somewhat of a down move in the markets, and I'm just looking over at my screen. We closed, fractionally down. Futures were off. So I do think we're in for a little volatility and likely some sell-off action next week. Some consolidation, nothing significant. All opportunities to go long and opportunities to buy the market. But nonetheless, I do see this coming back, and I think this is an awesome setup for these much higher prices. And yeah, that's kind of how I see it. So if you like today's analysis, recap, especially obviously hit the like button. Comment below if you took this trade, because it was an awesome trade. 35% in 3 weeks. I mean, come on. It was pretty cool. So comment below. Let me know if you took it. Let me know if you're still long it and hadn't sold yet, and all those good things. And then subscribe to the channel, tick that little bell, and guys, I'm going to catch you guys on the next one. And I'll leave you with this. Remind you that it's never financial advice, always educational, informational purposes only. Please do your due diligence. Do not take my trades blindly. Do your own research. Do your own due diligence. But hey, at the end of the day, let's make a lot of money together. Okay, guys, we'll see you on the next one. Take care.